Welcome back to Digits here at WSJ Live. That is people queuing up, waiting for the new iPhone. Obviously, they want that. It was announced last week, and they're very excited about it. And separately, but not unrelated, Apple has reached the exclusive $700 a share club, or it did for a while. It's kind of not there now. We got Steve Russolillo to talk about this with us. This
very
is
exciting.
It's very exciting.
Very exciting.
It actually happened in after-hours trading last night, didn't it?
And it happened this morning too. Briefly topped 700, hit 701 actually, and now has pulled back a little bit.
It's about 699 now. There it is, 698,
right.
65. So, you know, very, very close there. How exclusive is this club?
It's pretty exclusive. Right now, there's only 5 stocks that are currently trading above $700. The big ones that that are well known are Berkshire Hathaway, their Class A shares. That's Warren Buffett's company. Class A shares are well above $700.
That's above $100,000 a share.
And Google is actually one of the more recent entries. Google is above $700. Now, if you remember, Google shares went above 700 in late 2007. Then the crisis hit, the stock went way down. It was below 300 at one point, and it took years, but Google just recently has moved back above 700. So
and there's a couple of others, Seaboard and NVR. For people not familiar with those companies, what are they?
Yeah, they're lesser known companies. There's also a company, LICT, which is a Delaware holding company, is trading on the pink sheets, and that is trading over $2,000.
Now, the pink sheets is sort of less regulated in some ways than being on the New York Stock Exchange or the NASDAQ. Now, let's back up from this, because people say, oh, a high price share, that means the company is valuable. Now, in the case of Apple and Berkshire Hathaway, they are valuable companies. But does it necessarily mean that? Because if you've got like, 100 shares outstanding and they're $700 a share, that's a pretty cheap company. Right.
And actually, well, some valuation metrics suggest that Apple really is not that expensive based on its earnings. So if you look at its PE multiples, that's the price to earnings ratio, considering that the company's earnings are astronomical right now, the company only has a PE ratio of about 16, which is actually relatively in line with, or even cheaper than some of the other big tech companies out there. So if you're looking at just the company's valuation and basing that on whether it's cheap or expensive, it actually looks relatively, you could call it fairly priced or even cheap.
And it is, in fact, it is an enormous company just by value in terms of dollars of value there. And I'm thinking also about other people you really shouldn't, when you look at a company, say, well, here's a stock, it's $5 a share or $700 a share. That doesn't really tell you anything, does it?
Exactly.
You've got to look deeper, haven't you?
You got to look deeper, and that's where the valuation metrics come in. So, this comes at a time where the iPhone 5 Euphoria is really ramping up. People are waiting outside. The pre-orders hit over 2 million. I mean, there are, there's a lot of hype around Apple right now, and we've seen it time and time again. The stock, this is the biggest company by market value ever right now, certainly this year and ever in the U.S., and the stock is up 73% this year, which is just mind-boggling to me.
Had a dip earlier in the year.
Exactly.
Got a lot of people kind of worried about that. Now, part of what's going on here is they're going to be having a dividend. Right. And people are very excited to get that dividend, right?
Paying a dividend, share buyback. Yeah, these are all. This is where the new tech company meets the old tech company, right? The company is becoming a little bit more mature. It's giving back some of its boatloads of cash to shareholders. That's a good sign for shareholders.
At what point does this get too expensive for retail investors to invest in it? You've got the Berkshire Hathaway, which you need $132,770 plus the trading commission to get one share.
Right.
So that's a bit pricey for a lot of people.
And I think, of course, that is. But I think that with the $700 club, the reason why it's so exclusive, reason why there aren't that many companies within this club is that you get to a point where the stock does seem pricey just when you're buying one share. And I think you saw that with Google 5 years ago. You may see that now with Apple. It may provide some sort of resistance in the sense that, this from just a psychological perspective, it just sounds expensive. And this is what gets back to what we were talking about. $700 sounds expensive. Now, valuation-wise, may not be so expensive.
Well, but they could have 10 times as many shares and it'd be 70 and it wouldn't seem, but it'd be the same company.
Exactly.
Very important to note that. Thank you very much, Steve Russolillo of the Wall Street Journal. Check out more on that on WSJ.com.